Hello, everyone, and welcome to today's In the Know podcast, where I'm delighted to have Ben Hampton, CEO at Wealth Wizards. Ben, great to see you today.
Good to see you, James. Thanks for having me along.
Pleasure. So we're going to be talking about you. We're going to be talking about Wealth Wizards, and then I want to focus on the advice, guidance, boundary review, and really unpack the aims of the review, see where we're at the moment. Because I know it's a hot topic and I know it's something that is clearly passionate about, from your perspective as well. So I really want to understand more. Okay. But I'm also conscious, Ben, we've done a podcast before. We were talking about artificial intelligence. We're still here. We haven't been overtaken by Skynet. Not that I know anyway. But I never really asked you before in terms of your journey into financial services. So if I can just focus on you a little bit, find out a bit more about you, that would be great. And maybe you can just share a bit of your background and what actually drew you to this wonderful sector.
Yeah, thanks, James. I say as a lot of people, you probably stumble into it. There's no kind of grand plan of turning up in financial services. I did a maths degree, super cool, obviously. Did a maths degree at Newcastle University. And I think the bit for me was always, what was the so what? That was the bit that was interesting. What was the so what? And then, I started looking at potential graduate jobs, internships, and effectively there was an opportunity to do an internship with Standard Life up in Edinburgh. So I was seduced by a summer in Edinburgh with Edinburgh Fringe Festival, probably, and I didn't know what the hell an actuary was. And before I know it, I was training to be an actuary. I don't often lead with this, so don't tell anyone. But I kind of started off with that, and it gave me quite a good grounding in financial services, pensions, and what I got drawn to more and more was what's the so what? What's the outcome? So that was that so what bit of maths and statistics, and then it was applying it in a business setting. That's what I was sold on. Whether that's the reality of doing what I was doing is another question. But then it was all about customers. That was the thing that kind of got me excited, and kind of the path I've taken. It's really about how do you help customers get better outcomes, and that's the interesting bit for me. It's supporting customers to reach the goals, really, which is why the financial planning and advice bit comes in heavily for me.
And so that's interesting. So I won't lead with the fact you're an actuary. Obviously, you want to keep that quiet, which is fine. I did actually see some actuary jokes the other day. I don't know if you saw them on LinkedIn, but from time to time, they actually come about. So I'll share them. They're clean, but they're actually quite funny. Good. And I actually do work with an actuary now as well. So
they're not bad. They're not bad people. I'm just it's interesting. I don't think it's an obvious thing in terms of what I'm doing in a fintech, right? It's not necessarily where you start.
No, because normally, when you were training to be an actuary, it does give you opportunities to do different things. But you were obviously attracted to the customer side. Why do you think that was? When you talk about the so what, people talk about the purpose, don't they? So it's like, what sort of, again, shaped you around in terms of finding that purpose?
Yeah, there was a few things. Like, actually, my first job was a really traditional actuarial job. I was counting dead people, right? It was kind of looking at how long people were living and working out, mortality assumptions and all that type of stuff. And I was really fortunate. Someone turned up in the team who had come from marketing. There was a commercial kind of pricing actuary. And before you know it, I was kind of like, well, so what are these things for? Why do customers have them? What is an SIPP? It's a self-invested personal pension. Okay, what's that for? And I was fortunate that I got moved into marketing, so I got to engage with different professionals. You then start to think about the tax wrapper, which was different than just the numbers. You think, well, what's this tax wrapper for? Then it's who uses it, which is the customer. Then it was like, how do customers get access to it? So the workplace came into it, and in workplace pensions, and then obviously financial advice. And I was probably lucky in terms of some key roles in the career that got a chance to be involved in retail distribution review. So that was a really great time to understand about the advice market. And, I always think it's, and again, linking to what we're going to talk about later, it's a great time to get involved in a part of the industry you've not been involved in when significant change happens. It levels the playing field, right? So there's all these people that understood how the market worked, and I didn't know anything from the history. And then effectively, the market gets rebased, and it's almost the new normal. And sometimes you're not wedded to the past. So that was really interesting, seeing how RDR, Retail Distribution Review, came about. And then after that, I had a couple of other really key roles that kind of broadened my perspectives. I had a strategy role, which kind of taught me to look further ahead, which is probably why, again, I'm interested in this type of stuff, because it's how the market will change. I think that was really important. A little bit of time as an executive assistant to the UK and Europe CEO at Standard Life. So that was, again, really fortuitous, seeing how a business runs end to end, which, in hindsight, I was doing lots of junior tasks, whether it was taking minutes or what have you, but you was exposed to lots of things which even now in my CEO role, you can draw on those learnings, or so-and-so did this. Actually, I've seen a problem a little bit like this before. So that was helpful. And then from that, I spent some time in distribution, actually, which was in sales, which was great, but it was in workplace pensions, going out to see employers as a client relationship manager. And it just really taught me how little customers understand and know. And like, why should they? It's a minefield, which then comes back to customers need that help and support, guidance or advice. How do you do that? And then, I was lucky to kind of get the chance to get involved in the advice business at what was Style Life Aberdeen, 1825, that became then Aberdeen. And I effectively ran the digital advice business that we were building out, which I have to admit, we never really shouted about. It was in a really good place. We were doing really well. At about the similar time that M&G launched with their piece of kind of hybrid advice, we were doing exactly the same. But for various and reasons that were kind of broader across the group, there was obviously a change in brand name, a relationship with the Phoenix Group and Aberdeen changed. And unfortunately, we didn't have access to the customers in the same way. So that didn't really progress as we hoped, because it was actually a really good digital proposition. It was hybrid, but it was a really good proposition. So I think hopefully the thread through there, it was understanding the customer, understanding how customers get access to the help they need. It was really what's come all through it. And then, look, digital's, we're not getting any less digital. Let's put it that way.
Indeed, absolutely. And I think, so you've seen and you've had experience in different parts of the ecosystem of financial services. So what would you say has been your most valuable lesson so far?
Yeah, really good question. And this might sound, it's something that's persisted actually through the career. So when I was taught it at the time, it was probably very specific. It was always put yourself in the shoes of your audience, right? And that was probably, as a young graduate, been taught how to present and do a presentation, think about the audience. But I think that's flown through all the way through in leadership. So whether it's in proposition design, thinking about, the customer and what they're trying to get out of it, thinking about what's going to help the advisor to deliver on their ambitions and their goals, what it means for the employer, all these aspects. But then from a pure leadership perspective with people, thinking about how is the message going to land with them and that importance of communication. And I think often you might design a message that you're going to deliver, or a new strategic direction, or a difficult message actually. And you've talked about it, but for most of the audience, they're hearing it for the first time. And you have to really remember that precision of communication, the clarity of communication. But again, put yourselves in the audience. And, there's that rational side of an argument, but arguably more important for me is the emotional side. And it's how do you bring people with you on those hearts and minds. But yeah, it would be, on a basic level, it would be really think about the audience and put yourselves in their shoes, regardless if it's proposition design or communication. It's massively important.
Yeah, I think that's really important. I think sometimes that's what we forget in the industry. We forget about the target audience because we're very good at overcomplicating things, even the basics in terms of what is independent advice.
Oh, completely.
Even the word independent, it can be very confusing. So that's a good way of looking at it. Talk to me about Wealth Wizards then. For those who are not familiar with Wealth Wizards, who are they? What do you do? Give us a bit of background if you can.
Yeah, so Wealth Wizards, I've been there for just over 2 years now. Wealth Wizards was founded really with a purpose to make financial advice accessible and affordable. That was the mission, right? That was the purpose. A couple of people thought about that around the time of RDR, actually. Kind of originally ideas were thought up. But what we do is we're building digital guidance and advice journeys. So it's not just advice is the answer to help people. Guidance has a really, really important role to play as well. And we're effectively building digital journeys for guidance and advice, that software as a service that people can use, the white label, parameterize it to their own needs, and effectively put it in their own brands. We've not got the brand to go and help customers ourselves directly. The brand trust digitally is so important. So it's about powering big brands to take that. I think the bit that's really interesting is there's two parts to our business. And I think that's really the reason that kind of makes us special, actually. We're not just a fintech, we're fin and tech. We've got the in-house small IFA business, and that can use some of the technology. It gives us some people with financial planning principles and practices, gives us access to some small amount of customers that we test things with ourselves, which is really, really great. So that's kind of what's special, I think, in terms of that combination. And I think another thing that's probably quite special and maybe not obvious, we're owned by a mutual. So we're owned by Royal London, but kind of standalone. And I think what's really interesting within that is Royal London, because of that mutuality and societal purpose point, they want us to do things that are going to make a difference. They've got a longer term investment horizon as well, which is great. And obviously, we have to be really careful about the existing clients that we have. We've got very clear kind of rules around we can't share things with Royal London, as you can imagine. But they're a brilliant investor, and I think their kind of mindset of mutuality. I'd never worked with a mutual before, and it is a really interesting thing in this day and age. That kind of social purpose side of it. It does bring a really nice kind of complementary focus on the vision and purpose. So that, really positive. But ultimately, digital journeys around guidance and advice that people can parameterize. And it's we've got this small advice business as well, which I really love because it keeps us honest. And they're doing really well. But it's kind of we're trying to be a digital model office in that space. Trying to push the boundaries as much as we can.
And what drew you to Wealth Wizards? What was it that attracted you to the role and the company?
I'd been in big corporate. Is the reality. So it was a hell of a transition, and I had a couple of different job offers. I just felt time had kind of come to a natural end from Standard Life Aberdeen, and all that. And it was got approached by a few people and chance to change the market. Right, that's probably it. Right, and actually being a meaningful part. So I didn't join as CEO. I joined as the Chief Product Officer, and then quite quickly was asked to step up into the CEO role. But effectively, it was the chance to change the market. My belief is the market is going to change. It is going to change. It's changing. And whether it's going to happen in the next year or 5 years, it's going to happen. And I wanted to be a part of somewhere that could do it. And if I'm honest, I just quite like the vibe of the small business. I spoke to another firm, which was a much bigger business, and kind of turning up at Wealth Wizards, which was like going to, we're pretty much 100% remote, right? Which brings real positives, but real other challenges as well. You turned up at this office, which is more like a shed, versus I was somewhere else and kind of was in a client room overlooking Tower Bridge in London. It was just a slightly different vibe, and I thought that business was really, really great as well, but different. And I just wanted the chance to kind of be closer to making an impact on the outcome. I think that was the key thing. So change the market and feel like I was not in just a small cog in a big machine. Actually be closer enough to influence the outcome for the benefit of the market and for customers.
Was it quite a quick or intuitive decision to join them then? If you had a couple of job offers, did this just feel right for you because it just fitted in with who you are and be able to change the market?
I think I knew I needed to leave where I was previously because I'd kind of was 14 years and it'd been brilliant for me, that company, in terms of Standard Life and then what became Aberdeen. But I was worried I'd become institutionalized. 14 years is a long time in one place. And I was like, if I don't move now, so I'd already decided I was going to leave. And then it was the same as anything. People, you start listening to people that are always kind of staying in touch or nudging you and what have you. And it was, I don't know, it felt right. I'm a big believer in trusting your gut. And it just felt like right. And I felt, look, this is going to be an exciting ride. And look, being in a small company is sometimes chaotic. Let's not pretend it's not. There was one thing I don't know, when we first started and I first became CEO, the heating broke in the office and we couldn't get the heating fixed. And it was not because a part was missing, same as any of us with our boilers and what have you. But I was came home and I was like, it's like I'm having to we're sending messages out to people to put a curtain on to go to the office. I was like, I wasn't sure this was about running a business, but it's the chance to make a difference. And it was actually, as you said, it was a pretty quick decision, and it felt right, and it still does. It's hard, it's frantic, it's exciting, but really enjoying it on a number of levels.
What does a typical day look like for you then?
Varies. We're typically remote, right? So it's often meetings, but it's because everyone's remote. It's okay. You're all on a level playing field, discussing stuff. The biggest thing I think in a smaller business is just a different type of technology you use, and it's pretty obvious to most people, but who's in tech businesses, but from big corporates, you're using Slack to do your messaging. It's Confluence and the Atlassian suite to kind of interact, whether it's a Miro board for proposition design. It's much more collaborative toolkits. And actually having those conversations where lots of people would say, hey, we've got Teams and we can use chat on that. Slack is just much better for the kind of culture we've got and the people we've got. And it's just little things like that. So it's a mix of things. And then I think what's really important for us when we come together, but from my perspective, it can vary from having a meeting with finance to the small people function that we have, to catching up with the proposition guys, product guys, engineers, to effectively then conversations with the kind of client services and client solutions teams, which are looking at those external bits. And then, look, now and again, you get thrown in what's the response to the retirement income advice review for the regulated business, and really getting kind of down and dirty into some of that stuff. But yeah, I enjoy the breadth is what I would probably say. But ultimately, it's trying to set that vision, trying to help people ask the right questions. I'm not the one doing the work. It's the guys doing the work now, but it's setting enough of a vision and then trying to use your expertise or experience to almost fresh eyes, because you're not in it and it does move fast.
Yeah.
So have we thought about this? Why have we done that? So yeah, it's more about asking questions half the time. I do try to do some work, I promise, but it does feel like you're asking more questions than doing the work.
That sounds great, and I understand. Running a small business, the pressures that you get, and you have to wear many hats. That's what they say. And obviously, you're saying you're remote, which obviously has its benefits, but its challenges as well. So, how do you win those hearts and minds internally? How do you bring people along with the journey and set the culture, which I always think is quite difficult when people are working remotely?
Yeah, it comes back to that communication point. That's the bit that I think we kind of wrestle with: is how do you recreate the impromptu and the informal? That's the bit that we try to do. So look, from me, from a leadership perspective, do a huddle 9:15 on a Monday morning, which is maybe my rambles from the weekend or the week ahead, but checking in and touching and what the things that are important and celebrating successes where we can. That's the other really important bit. And then town hall every 2 weeks, like an all hands meeting. And I think the biggest difference I find funny from working in a big company before, which again, if you worked in a small company, it's just normal, right, and authentic. So we use Slido to ask questions, get all sorts of questions. They're not filtered out. Whereas in a big company, there's probably someone in the background, a production person filtering out the hard questions. Where you get the hard questions and you have to explain them and try and answer them the best you can, which it keeps you honest, right? But I think that's really important for the culture of trust and honesty and authenticity. But it keeps you humble as well, and that's massive. We bring people together. We have company events. We bring people together. We encourage the teams to come together. But sometimes when we come together, it's less about the work. It's more about just being together, and it's those relationship building. I think when new hires are formed or new teams are formed, we have to work really hard to do that. But that kind of initial relationship. But the beauty of it is we've been able to, we're no longer recruiting around Leamington Spa, which is, well, I wouldn't be working there if you had to go to Leamington Spa every day from Edinburgh. So we've been able to widen that talent pool massively, which I think is a massive help. And look, people want flexibility, right, in their lives. Different generations want different flexibility as well. So I think it's a real positive. But as you said, you've got to watch for some of these bits and pieces. And I think the biggest thing is communication. And look, we've not got it perfect. We're trying to do things. We're trying to keep repeating various messages. But again, you've got to work hard at it. Got to keep yourself held to account, I suppose.
Yeah, you do. No, I totally agree with that. And is there anything you can share in terms of, you being a fin and a tech business? Is there anything in terms of innovation that you're particularly excited about at the moment that you can share with people?
Yeah, so like the technology guy, we've got a really good technology stack, modern, and the guys would talk about it more than me in terms of our CTO and the tech leads. Rather than saying it's the technology of technology's sake, it's solving problems. That's what we're all about. Is how do you solve that? And not surprising given what we've talked about, how are you solving problems for the customers? So we're doing something really great at the minute that the guys are doing a brilliant job on around retirement planning. And actually, how far can you go with getting a retirement plan for a customer under guidance that's helpful enough or accurate enough or precise enough to be useful? And then the beauty of it is then how do you give them alternative achievable plans? And look, lots of people can't afford to retire. So you might need to work out, do they need to go a bit later or take a bit less? But likewise, there is some people that are in a really fortunate position that they might be able to retire earlier. And it's how do you effectively work out these different scenarios that are credible? But ultimately, what we're trying to do is use effectively a guidance setting to kind of bring the customer along in that kind of thinking, so that if they decide to go on to advice, brilliant, but actually they can get a lot of help under that guidance space. And we think that's probably an underserved segment of the market. We've inevitably, given we're doing a lot of work with Royal London and another life company, we're doing quite a lot in the guidance space. We probably started off in advice quite heavy, but that guidance and link to advice we think is really positive. So yeah, focus on retirement planning. Look, I'm sure lots of people would say retirement's where the money is and where the opportunity is and where the demand for help is. But yeah, really about the plan. How do you kind of drive that and help our customers to see it's not just the pension. Retirement is more than that. It's other financial instruments, but it's emotional stuff as well. We did some really interesting work with a behavioural consultancy firm about kind of your relationship with money and feelings around money. And that was really interesting because that has a massive impact on confidence, and confidence is what can maybe give you that bit in a digital setting, whether you'll click yes or click the red cross and shut the page. because that's the hardest thing with digital is you've got to get the customer to convert to action. There's no point having a good experience and they just kind of stop. It's how do you kind of get them forward, and that confidence bit and using good user experience design is obviously key to that.
Yeah, because I think this now leads us very neatly into the next part of our conversation, where we're talking about solving problems. So the advice guidance boundary review, we're going to be talking now about the advice gap. There's a problem. But I will also just touch on what you've just mentioned there about almost making sure the consumers and the customer takes action as well, because that's a real issue. I understand, because you've got influencers out there, people see YouTube, you've got scammers, etc. Say what you will, but the scammers and people like that are very good at getting people to take action. So I'll come on to that later on in terms of, the next stage to get people to do something. But we talk about the advice gap a lot. You hear it a lot in the papers, you hear it a lot within the industry, but I also hear sometimes different definitions or different numbers being bandied around. So I always like to start with the basics. So, how do you define the advice gap? What actually is the advice gap in your words?
Yeah, I think it is grey, right? I think the reason people describe it so differently. I've probably started using the word help gap rather than advice gap. I don't think it needs to be advice to get the customer to get a good or sensible outcome. There is other mechanisms that could be supportive of them, or more actionable guidance effectively. So there's various kind of reports out there, but I think there's a few themes that kind of come out on the advice bit, because advice is paid for and guidance isn't. There's an interesting dynamic there. And you're paying for the gold standard, right? That's the other bit. Advice is brilliant. Like, we should applaud our advice profession in the UK, right? It is really great and professional. RDR increased the professionalism of it, which is great. It's maybe left an underserved population, which we'll come back to. But those who can access advice and afford it, they get a great service, actually, a lot of the time. There's some brilliant financial planners out there, make a genuine difference. Massive fan of a financial planner. They do a great job, genuinely. But there's that bit around affordability. So can you afford it? Then there's a bit around, access. Some people, even if they could afford it, don't know where to find an advisor. Like, it's quite an odd thing. It's like, where do I get it? And it's such a fragmented industry, actually. There's lots of local things, which is great, right? It's like your local bakery, your artisan bakery. It's support local and all that stuff, brilliant. But you don't quite know where to get it. And it comes down so many times from recommendations. And then, the other bit is availability. Because, you might be able to afford it or not. You might not know where it is, but it exists. But the availability point then comes into that kind of underserved population around. Sometimes advisors, the demand is greater than the supply. So therefore, they don't need to go down to the lower wealth or certain needs. They can actually be quite discerning about who they serve and look after. And it's a commercial industry and a profession. You can understand that. They're not a charity. But that availability point is when we're actually, how do you get other elements of support coming in? I think the number I would probably use is, there was a report about the advice gap. And again, it's a Royal London one, but I quote it because it does guidance and advice. But over 20 million people have got that kind of need of it. Lots of other people have got great kind of stats. So whether it's the Landcat, whether it's Boring Money, there's lots of people that have done really good stuff in this space. But ultimately, it's a big number, whichever way you cut it. And I think for me, it's around people getting the help they need. That's one part of it. But I just think there's another population group which don't even realise that they could get help. And what you then hear when you do customer testing is, advice isn't for people like me. And that's really quite sad, right? It's quite sad because that might not be true. But then if we can improve the availability of it, whether it's advice or another form of more actionable guidance, we could really help these people.
So now we can talk about the guidance boundary review. So I've done some research. I've looked into it. So is this now, I guess, the starting point? What is it? Where are we in terms of the feedback loop? Because I know you're on I'm not sure it's a committee, etc., but you're part of the group discussion. So it'd be good to sort of go back to what it is, where are we now as well, and then we can go a little bit deeper.
Yeah, no, I'm impressed with your research, James. It's good. My team always take the mick out of me that I just bang on about this stuff because I am passionate about it. But 3 parts. Ultimately, the step back was there's a recognition that there's a help gap, right? And that word help is part of what's going to come out in terms of the reviews. It's not just advice. I think reflection that there's been a few bites of the cherry at this as well. I think what I've loved from the regulator and Treasury, I think the fact that they're both doing it together is kind of creating an interesting dynamic, quite different organisations. So together they're hopefully going to get a better answer. But what they've effectively said is, look, the previous interventions post RDR, so the FARMA, the Financial Advice Market Review, various other things, hasn't worked. Actually, it's not caused the desire. There was ideas around core investment advice, various bits and pieces for different people who are listening to this who've got more detail. Haven't really taken off or worked, whether it was simplified advice or what have you, sort of streamlined advice. So there's different kind of acknowledgement that there's a problem. The problem is getting bigger because actually cost of living is harder. People have got bigger DC pension pots, and that's the other thing. And people are living longer. All that kind of structural and DB defined benefit declining as well. So the emphasis on the customer, the everyday member of the UK population, the onus is on them to look after themselves, which is harder, right? So I think that's the recognition. What then has come out in terms of the proposals, first stage is we've done a discussion paper that came out at the end of last year and responses came in February. The working group's actually meeting again in June, so we're kind of going back together to see the results. But I think over 100 different responses, so quite well-engaged responses from a variety of elements across the financial services sector. Effectively, it had three things in it. First thing was, could we clarify a little bit more the difference between advice and guidance today? It looks like they might do a little bit of that. I have to admit, I personally think that's a distraction. It's not going to move the dial. We were really strong in our response saying, don't focus on that. Let's focus on the things that will make a genuine difference. Unless you make such a change to that definition today that people will be interested, you're almost create a new regime to do that, which is what the second proposal is all about. The second proposal is there something in between guidance today and advice? And they've called it targeted support. And I think really it's around helping customers to get more actionable guidance. If you think of guidance today is you could do something, and advice today is you should do something. And it was someone on LinkedIn that put this from Aviva. It was targeted support is effectively you probably should. And what the targeted support regime is about is, can you use a combination of data to effectively find out which target market a customer group are in? And then can you give a series of sensible suggestions? And maybe we'll talk a little bit more about targeted support in a second, but it's really around target market, sensible suggestions. Customer still decides, but sensible suggestions that they could take forward. Whereas advice is a recommendation. It's a suitable personal recommendation that you pay for. So it is that gold standard or whatever you want to call it. And I think the last bit of the proposal is looking at, is there another form of advice, which they've called simplified advice, so proposal 3, which is really around just for certain needs, certain case sizes, certain types of advice could be delivered in a certain way. Now, interestingly, it talks about lower qualified professionals delivering it. I have to admit, my view is technology will get, and I'm slightly biased, right? Technology will effectively remove the need to have a qualified human doing it. You might want a qualified human for other reasons, experiential or otherwise, and then they might not be qualified into the same level. But I think technology can drive a lot of that. But look, they're the three things. Clarify the existing rules, which I'm not sure it's going to make that much difference, but they might have to do it. While they're developing the real game changer, which is the middle one called targeted support, which is a more personalized form of guidance. And the third piece is really around a more simplified form of advice, but still advice, but with a few different bits and pieces. And I think the consensus on that in the market has not been that there's something there, but maybe not quite what the proposal is. And ultimately, what the regulators trying to do is get effectively a continuum of support, but like a progression. At the minute, it feels a bit like a big jump from information, bit of guidance that's not necessarily that helpful to all the way to advice. And it's quite hard for customers to access and understand that bit. So that smooth progression on that continuum of support, I think, is the overarching outcome.
Okay, now that's right. I'm with you. I understand those three core elements. A couple of things then. You said that the FCA and the Treasury are working together. That's a good thing. Political changes may happen at some point this year. I was looking at various different economic reports, looking at the polling data. It looks like it will be a Labour government. Let's assume that will happen. Me being me, I'm always looking, is there likely to be any change of direction, etc.? So if there was a new government coming in, do you think it would affect it, or do you think we'll just continue with this path because it's good to help people?
I think it's a really good question. It's something I've been debating with a few people, actually. I think inevitably, as you said, regardless of your political beliefs, I think helping customers to get better outcomes, regardless of what party you're in, I think that's a good thing. Different parties might approach it slightly differently. So I do think inevitably there's going to be an election this year. It will slow things down, especially Treasury. I feel for them. They get a whole different set of bosses. It's been really interesting to interact with Treasury, actually. They have a really interesting but tricky job. And obviously, as you get into election, obviously the civil servants are looking at various bits and pieces. This isn't necessarily the immediate priority. But then they've got to brief new ministers, potentially, all that type of stuff. So I think inevitably it will slow down a little bit. The FCA can obviously continue to move on, and all the noise I'm hearing, they're pushing on with it in a good way. I think the reality is it might take a little bit longer. This year might not be the year of progress that would have been if there wasn't a general election. But yeah, I come back to it. Regardless of what your beliefs are, it's a good thing. I think the one thing we have to acknowledge, given that they're effectively proposing a new regime for this targeted support proposal, it's going to require some legislative change. So by definition, you've got to then get onto that kind of pathway to getting that approved and done. And there'll be other things a change of government might have higher up the list. So we need to be wary of that. But look, it might be 2026, but you'd hope that people are going to be working towards it. And I think bits I've heard is it's more likely to be, it's not primary legislation, it'd be secondary legislation potentially, which makes it a less onerous change. But nevertheless, we've got to be realistic. There's a few, inevitably there'll be a few competing things. What Labour yesterday were talking about, the little card with their pledges or whatever. So there's obviously the grandstanding is starting to come out now in terms of people getting ready for that election mindset. So look, I think the change will happen. How it might be executed might take a little bit longer. But look, we want to keep pushing it on. I think it's onus on the industry to keep pushing on and probably move from that theoretical stage of a discussion paper to what could be a practical reality of how it could be deployed. What difference would it make? And I think the onus is on the industry to help the regulator and the Treasury to show that, because that's what's going to get a better experience built for customers rather than designing it in a darkened room. I think it's really clear you want to test stuff, you want to try and push the boundaries, and some things won't be right, but we'd rather find that out in the design process than after the rules have been enshrined into law, I suppose.
Yeah, and with the people or the companies who are contributing to the discussions, etc., how unified is the industry? Do they all see this as a welcome piece of change? Because sometimes we're also within wealth management, we're also quite good at falling out with each other because there is always vested interest. So it's almost the question is, so how unified is the industry with potential regulatory changes like this?
Yeah, I think I've never been involved in something at this level, right? So it was been really good kind of senior people with the regulator and then the Treasury going to like some roundtables with the city minister. It's been really, really powerful and really interesting to see actually people wanting to make genuine change. That's been great, right? So actually the mindset and the will is there. I think sometimes the fallout is because the will isn't there to change. It feels the will is there from all sides, the regulator, the Treasury and the industry. I think everyone's been quite collaborative up until this point. It'd be now really interesting that now there's a proposal and people have then responded to it. Inevitably, people's response to that proposal will be shaped by their business model. And I think the really honest thing I would give, and look, so I'm really open about my bias. My bias is tech is part of the answer. But I would hope that's not controversial, right? That digital is going to be part of the answer to this regulatory change. To get support and help to the masses, you're going to need to do that in a cost-effective and scalable way. But then there's other aspects around, the targeted support regime. You don't have to charge for it, is what the proposal says. So it's really going to help people that have got existing customers, right? And if you've got an existing customer base, maybe you're a workplace pension provider and you've got a load of customers in that space that want help, you might be able to give them more actionable help that makes them stay with you, takes more positive actions with you about their retirement planning or whatever. You've maybe got more of a competitive advantage in this space than someone that doesn't have a workplace pension and just offers advice, right? So it's really interesting that there's these different dynamics that I think will come out. And I think you can see that now I think the initial paper that came out, there's lots of consensus that, hey, targeted support's a good thing. There's something in the space of simplified advice, but I'm not sure there's a consensus on what it is. But I think since you've seen people submit the responses, some of the articles in the trade press, you're starting to see different positions appear. And if I was being cynical, you'd say like it's influenced by the business model. But I think that's just been commercial, right? I understand that. I think that it's not a criticism by any shape or form. But I think we're starting to see that because people are offering quite diverse views now on targeted support. I think the one thing I would say is there's a little bit of chatter that consumer groups are seeing targeted support as a bad thing, potentially about product flogging, and it'll just get bad outcomes, the bad old days pre-RDR, even though it's not advice. I think we've got to be really, really careful with that. Consumer duty is real. Consumer duty has teeth. And if you are not looking after customers and trying to get good outcomes, better outcomes, you're going to find yourself in a mess. And consumer duty is a massive difference to the other aspects of these regulatory changes that have happened before or attempted to happen before. That is a game changer for the regulator about how they can then enforce good outcomes. And I think the mindset of things have changed from industry players as well, genuinely thinking about what outcome this is for a customer, what it might mean. So I think that's one really, really important aspect. And ultimately, I don't think it's about selling loads of new products. I think it's about getting customers in existing products to take better actions. You know, most people after a current account and a mortgage potentially, and not everyone has a mortgage now because they can't get on the housing ladder, you're going to have a workplace pension. Yeah. That's what people have. And I think it's how we get people to make better decisions on that is huge. So like I would say, look, it's a really massively important thing. And yeah, let's not get seduced by the noise of, oh, let's all disagree. Let's all try and make sure at the end, the industry can do better than it's doing today. Here's a chance to have something that's a game changer. Let's work together to get the answer rather than, as you said in the past, the industry kind of has a good habit sometimes of overcomplicating it is the phrase I would say rather than falling out. But we have a tendency to overcomplicate.
That's a fair point. And these consumer groups are a little bit more hesitant. Do they understand and appreciate that there is an advice gap or a help gap? Do they understand that something needs to be done?
I don't know. And look, I've not spoken to them, but when I've been speaking to Treasury and others, you're kind of hearing a little bit of noise around this. So there's got to be some basis on it. And again, it comes back to your potential change in government and you're looking at the polls. Would a Labour government be more sympathetic to that? I just want to reiterate, for most people, it'd be about taking a sensible course of action that's underpinned by sound financial planning principles to get a customer to get a positive outcome. And I think that's the really important bit on targeted support. It's not just based on data, and there's a lot of headline actually, and it's easy. It's like Netflix. People like you. That's what it's described, but it's not like people like you are going to just invest in high charging funds because that's what everyone else does, and for a certain provider, or you should all invest in cash because that's what people do. It's the combination of data to know what the target market is, and really importantly, it's sound financial planning principles. Actually, for people like you in this target market, these are the types of things you should be doing, probably should be doing. And I think that's really important to reiterate, because that's what's going to get those better outcomes. It's not product flogging by any shape or form. And I think if anyone tries to do that, they're going to find a consumer duty shaped foot on them at some point.
On the throat. Yeah. But I would say that the consumer duty, I did a podcast a long time ago, actually, and I remember thinking at the time, I'm not sure if this is going to make any impact. It's before it came in, but it has. And it's really started to change. So I know the regulator gets a bashing from all sides, etc. But actually, I think it's got some bite, and it's making people and companies think about their proposition and what we can do to ensure that, there's full transparency of fees, etc., and service. So that's a good thing. So it's there now, enshrined, and it's being used within advice businesses. I'm going to come on to targeted support in a second, because I've done my research on that, and I've listened to Harriet Baldwin when she did her meeting with I think it was a select committee. But where I was going to go with this. So in terms of, I'm a business owner, I'm looking at opportunities. If I were some of the bigger players, banks, building societies, you mentioned workplace pensions, I think this is a great way to engage with people.
I think
if I'm thinking there's an opportunity for, full advice, the gold standard at some point, there are lots of talk about intergenerational wealth gaps, etc., that we're not serving people that we should do in terms of currently with the advisor community. But I would say this is a very good way to build trust with people who may not know you, but you want to get to know them, and it's the engagement piece. So I would be looking at this as an opportunity for the next generation of wealth to come through, because I do believe you need to start to build up trust as you go through the accumulation phase, just doing the basic stuff. So I think this is my view, that is a good opportunity for some of the bigger players. What's your view on that?
We should get you on the working group. That's what I think. You've definitely done your research. I think you're spot on, genuinely. Joking aside, I genuinely think you're spot on. My belief is the winners from this are going to connect guidance to advice, or connect targeted support to advice. And once targeted support comes in, it's going to be more actionable. It's going to be more useful, right? As much as I wish that people threw the duvet back in the morning and thought about the pension or the retirement savings or a stocks and shares ISA or whatever, or medium-term savings, whatever, they're done, right? There'll be one or two triggers in a year at best that might get them to think about that stuff. And when they bother to interact, or they've got enough intent to interact, they've been able to log on, they remember the password or whatever, they've managed to get into an app, actually you need to then capitalize on that, and you want that experience to be useful for them. I think that's the biggest difference. Sometimes at guidance, because people are so scared of inadvertently giving advice, and they're trying to protect the customer, they don't want to fall foul of the rules. It's so vanilla and generic, it's beyond useless, right? So it's how do you, and I mean slightly provocative to make a point, but it's not useful enough for the customer to take a good action, right? And you hear lots of examples where people kind of are on telephone call center, and it's like they're hearing something, oh no, that's not a good out, but they can't really tell them what to do. And I think a lot of the time a customer wants someone to say, that's not bonkers. A little bit of reassurance and give them the confidence to act, right? And if you could do that, I think that probably should. Targeted support can do that. I think it'd be digital, but I think that makes a massive difference. But the one thing it will do is it'll probably then go, well, I'm now a bit more engaged in this because it was useful. So let's even take about you taking tax-free cash out your pension, or money out your pension when you can access it, pension freedoms. At the minute, for a lot of people, the process is so laborious. You get to the point where I've had calls, and it's like, they almost say, I'll just take it all out then, if it's a smaller pot, because it's not worth, I can't face ringing up and having another conversation on this. You can imagine if it became actually quite useful, customers might go, well, I might do this again next time, because they've helped explain to me there was these considerations. I'm only taking out what I think I need, and they've helped me understand what the consequence of that is and what I might need to do. So that kind of then means there's more decisions happen, there's more frequency. So that in itself drives a bit of engagement. So almost the velocity of decisions, or the market for decisions, increases. I think then the other bit is, if you give more actionable help, people will start to realize, God, there's a little bit more to this decision than I thought. Before, I thought I just had to decide whether I was taking my tax-free cash or not. I didn't realize that I could take part of it. I didn't realize I didn't have to take any of it this year, and I can come back next year or another time. I think that in itself will then lead to people going, now you've kind of taken me to understanding a little bit more, where do I go for help? And the phrase I would use is, those winners would connect targeted support and advice, but what you want is a seamless upgrade to advice, because then you want them to kind of carry forward with what they've done, and that then comes right back to that regulatory ambition of a smooth continuum of support. And I think that's the thing. But I think actually the trigger for engagement in this, as you said, I think it is the more helpful guidance, targeted support, because it's not paid for, so there isn't a back, but typically won't be paid for, I think. You don't have to charge for it. So I think that will drive engagement, and that in itself is a good thing. And I think if you then think of some of the timelines of things on the horizon, we've got things like people's DC pension pots are getting bigger. Pensions dashboard, people have different views on what impact that will have, but it will inject a bit of adrenaline into access of information. And if you get a bit, I didn't realize I had this pension pot, you want to then capitalize with, is there additional support that customers can access? And then look, continuing conversations around auto-enrollment levels increasing in the future. So you can see there's a few things that actually come together. And my hope is the regulator is looking at how these things might weave together. So you've got kind of a coherent offering. But I think my long-winded answer is, you're absolutely spot on. I think better guidance, targeted support, in and to itself will drive more engagement, which drives more decisions, better outcomes. And I actually think it will increase the demand for advice, because people will realize and value where that upgrade to advice could be a really, really valuable thing for them to do.
And I agree with all of that. I guess my counterpoint is, how do we get people to take action? Because there has been things that we've done before, like the money advice service or the pensions advisory service. So there's been support, citizens advice, etc. And Harriet Baldwin was saying that, when she went in to do some basic research, it was there was a link to some website which then referred out, to think about crypto. It's like, whoa, So even when she was making the statement, I was thinking, God, that's not great at all. And part of this is the challenge where you've got influencers, you've got people who are millionaires, and I just do this and I invest in some crypto, you've got scams, etc. How do you get people to build the trust and the engagement, but then to take action? Because now we're talking about the behaviors or the behavioral psychology about getting people to act, because these scammers are very good to compel you to do something. But, in a world that we're in a professional world, how do we counteract that to make sure that they're getting the right help that they need so they take action rather than listen to the influencers who are all living in Dubai?
Yeah, and it's scary, isn't it? I think that's the reality of it. It's genuinely scary, the sources of help that people think they would go to, and it's not regulated. It's obviously a extreme word, but it's not. No one's looking after it in terms of ensuring there's good outcomes or it's appropriate. I think for me, I'm going to be I'm biased to digital, right? So let's say that, but it's a combination of, like, I think this is where big brands have a role to play, because I think big brands is a good opportunity to drive that trust. Brand effect is massive. And that's not to say that local advisors won't still thrive, because I think they will, right? I think the more complex stuff, you're still going to go and see your local advisor. They're doing a great job. It's not about that market. It's about the market of the underserved. And that's really important. It's, it should complement it. I actually think targeted support and advice in general are friends, not enemies. As you said, it's leading stuff together. And I think the bit I would kind of draw out is it's got to be in, like, really clever digital design. So the fact you could give a suggestion, I'm using the word suggestions, like that could be, we've worked out there's 3 things you could consider. That's still like a choice for the customer. And it's like, I don't really know. I won't decide. I'll just stop. The skill will be getting to the point where you can say, right, this is the big red box. This is the one suggestion we're giving you for your target market. That's why I think it could be really, really helpful in a targeted support setting. I think then how you say, well, look, if you answer a bit more and prepared to pay a little bit, we can give you an even more personalized suggestion. Do you want to do that? And for some, it might be fine just to do that. But effectively, it's the Venn diagram intersection of digital skills that's frictionless and UX design, sound financial planning, behavioral economics, and conduct, all under that digital banner. And I think that's really interesting. Again, slightly biased, going back to Wealth Wizards, that's why we think as a fintech and an advice business together, we've got that combination of people that spend all day thinking about these things. So that's why I'm passionate about it, because I think it can make a big difference. And I think the best bit of research I've seen so far, the ABI did some research about personalized guidance, and it talked about actually different designs that they did around taking some money out of a pension. And actually, by being more specific, by being more opinionated, they massively increased the customer choosing the what was deemed to be the right outcome, or the right answer, the most sensible answer. But you've got to help customers to do that. I think it's coming down to, can you get to one suggestion or 2 suggestions? That's the skill in it. So look, it's a combination of behavioral, digital, UX, and sound financial planning principles, all with a conduct understanding. Which box do you default to? Like, thinking about that's quite a big deal. Like, deciding where you default to something can have an impact, on these choices. It's little things like that which might feel like really small in an overall service design. That might be the special thing that changes the outcome one way or the other. And it's, look, you'll need data and an audit trail to drive it, et cetera, et cetera.
Okay. And I guess you've teamed up with Boring Money as well. So I saw that announced in the press a few weeks ago. That's interesting. What's the thought process behind that?
Yeah, look, just it comes back to that point, right? How do we move from a bit about theory? So we're talking a little about theory in the kind of potential regimes, potential regulations, potential proposals, to how do we start to get into some practical reality? I've just been chatting to Holly, like, known Holly for a while. I was a massive fan. I feel like she taught me when I was reading her platform blogs back in the day when I was a youngster, kind of understanding how the platform market worked. I'm just a massive fan of her and that business. And I think we just had to, look, like-minded individuals coming together. We felt we could give them some complementary stuff, and likewise back to us. So what we're doing is we've given them one of our pension guidance tools. We've put it in the Borrow Money brand into their kind of customer portal. It's a relatively simple pension guidance tool, right? It looks at the retirement living standards from the PLSA. But what we're looking at is then what other content they go to in that experience. So hopefully we'll have some interesting stuff to see how a kind of you can lead it more to an action. Still guidance, still within the current rules, but we're trying to look at that combination of all of Holly's experience and their team's experience, which we've been really impressed with them and really enjoyed already just speaking with them. And it's been really interesting working with us in a small company because you can move quite fast, which has been nice. But that's really it. It's trying to move from theory to practical reality and kind of put together some complementary skill sets. And I'm just a big fan of those guys, and we're hopefully going to have a little bit of fun along the way as well.
Yeah, it's great. Yeah, I've read some of her stuff. She's got a very good way of writing and articulating it as well.
Absolutely.
It's really good. So I appreciate the time. It's now coming up to just gone 11 o'clock or the hour. Final thoughts then, Ben. Final thoughts in terms of anything else that you want to cover or say at this point with regards to...
I think there's a huge opportunity, right? I think my view would be the boundary review, change is happening in the market anyway because of Consumer Duty. So people should be thinking about this now. It's not wait for the boundary review because that's just the answer. The boundary review is an accelerant, and ultimately that targeted support piece is the game changer, right? The winners will connect guidance and advice, but being able to give that more actionable type of guidance that will become targeted support, I think is huge. And I want to make sure the industry grasp the opportunity to change it, right? This is like the next pension freedoms or the RDR. We've got to make sure we do that and do the right thing for customers, because again, they're the ones that are going to get the better outcomes. And if we do that, we should all be proud of what we're doing as an industry.
Well, if there's 20 million who are underserved, it's a great audience. It's a great opportunity. And I think one thing financial services is it can look at opportunities, just needs to collaborate, get the ideas and keep that momentum moving forward. So I think it's a great opportunity. If I look at it as a business owner, I think it's great to actually engage with people and not to lose that. If we want a profession to continue, then we need to engage people, all parts of their life, not just the accumulation phase or decumulation. So no, that's great. But I've really enjoyed this conversation. I've learned a lot more. I'm going to continue to follow you and take an active interest in this. So continue all the good work. And thank you very much for your time.
No, thanks for inviting me on, James. It's been fun. Thank you.